September 13th, 2024. Today was a pretty sideways day, one of the more sideways days we've had in a while. You can see we pretty much just had a parabolic wedge on the open. 1, 2, 3, or 1, 2, 3, or 1, 2, 3, however you want to count it. And then we just went sideways for the remainder of the day. So not a lot of money for stop order traders today on either side. Mostly ended up being a limit order day. And even then, I don't, looking at trying to find a limit order trade right now, I don't really trade on limit orders, but even still, there was nothing today for limit order traders even that looked super, super easy. Most of it was still difficult. So, maybe buying below 46, but other than that, pretty much everything today was just really not all that great. A lot of the stop orders had really big bars and really big risks and just never really went all that far, which occasionally happens. So it's Friday today. And when you're coming into a Friday, you have to look at the weekly chart support and resistance. And I was paying attention to the monthly chart since the open of the month was not too far above. It was at 56, 57. And on the weekly chart, coming into the day, this was an inside. Oh, it still is an inside bar. But it was an inside bar coming into the day as well. It was possible to reach the sell climax high, and the sell climax high was also the open of the month. So there was a lot of reason for us to try to get to the price point 56, 57. We obviously did not, but I thought it was reasonable to think we might try to get up there. Bar one, a bull bar closing near its high. It's good for the bulls. It's one of the better looking bars we've had in a little bit. But the problem is we've had a couple of bull trend days leading up to today. So I don't think today is going to be another big bull trend day. I think today is probably going to be either a trading range day or a bear trend day. So do I think it's going to be a bear trend day? Not really. So I thought today was mostly going to be a trading range day. However, I did think that we would get back into this gap or into this trading range from yesterday. This to me looked like a final flag from the bull move that's been going on. So I thought this was a possible final flag and that the breakout above it might end up failing and we would sell off back into the trading range. Bar two, a doji bar. So if you bought above one, bar two is relatively disappointing. You have a tail on the top and a tail on the bottom. The bulls who bought above bar one might be disappointed in bar two, and it's possible they start to sell out of their longs. The bears are hoping that even if 3 is a good looking bull bar, that 1, 2, and 3 end up being a bull trap, and we get a bear bar closing near its low for a possible high of the day. Bar 3, so three straight bull closes, 1, and then pull back on 2, and then bull close 3. Do you buy above bar 3? You can, but the thing you have to keep in mind is that we're on the open, and so 80% of opens end up being some sort of trading range. So it's a little bit difficult to be buying above bar 3. Your risk is also reasonably big, putting a stop below 1, and the context of the day is not overly bullish. So you have to keep all those things in mind if you're going to buy above bar 3. Bar 4, follow through, but a tail on the top and a tail on the bottom. So really not all that worth buying the close of 4. It is 4 straight bull bars on the open, however. So all four bars are bull. So it's really hard to look for any sort of credible short. The bears need to do a lot. At this point, they probably need to form a micro double top in order to get other bears to sell. So not really worth selling or buying the close of bar 4. Bar 5, an inside bar, a low 1 short for the bears. Do you sell below bar 5? You probably, I wouldn't. It's, potentially a low probability high of the day, but it's really not worth it after 4 straight bull bars. This is the first bear bar. And also, we haven't traded below another bar yet today. So there's probably going to be buyers the first time we trade below another bar. And that would be below bar 5 during bar 6. So we traded below 5. We found buyers during bar 6. Bar 6 is a high 1 buy for the bulls. So they have 4 straight bull bars, 1, 2, 3, 4. And then bar 5, a low 1 short. Probably buyers below like we got during bar 6. Probably sellers not too far above. Probably buyers not too far below. So bad high 1 for the bulls. Probably, like I said, sellers above. And then a giant outside bar on bar 7, but it's just a doji bar. So the bulls are hoping that bar 7 is a pullback and that we have a higher low double bottom and that we're going to get a breakout above and a swing up. The bears are basically hoping that we're going to get an IOI pattern and 8 will be a bear inside bar closing near its low and that they could sell that for a swing. However, I don't really want to sell because the doji bar is bullish and we've only had 2 bear bars so far today. But I don't really want to buy because it's a giant doji bar. So in this area, it's probably just better to be on the sidelines. We still have an open gap with yesterday's close yesterday's high. So we have an open body gap with the 63 open essentially from yesterday and the bar 1 open. But I'm not sure how relevant that's going to be if we can't get another open gap. 8, an inside bar, a high 1 for the bulls. Do you buy above 8? I would not. I think we're probably still in a trading range, and this looks like a leg up in a trading range. And if it's a leg up in a trading range, I'm not really all that interested in buying. So really not great to be buying above bar 8. Bar 9, the tail on the top as well. So 2 dojis, 3 doji bars, 6, 7, and 9 in the past 4 bars. So 9 is really not a great buy the close bar. It's like I said, we have 3 doji bars in the past 4 bars. And we have 4 doji bars so far in the day, and we're 9 bars in. Almost half the bars are doji bars so far today. So it's really not that good to be buying closes because this is probably just a leg in a trading range. However, it's really difficult to want to sell because the bears haven't done anything yet today. They only have 2 closes. 11, a bull bar. It's a really large bull bar. 10 is, I was on bar 10, not bar 11. 10, a bull bar, but a tail on the top. We have tails, 8, 9, 10, maybe a micro wedge, something like that, or some sort of channel, bull channel on a lower time frame. So this is the high of the channel, and then we got pullbacks on 8, 9, and 10 as well. So it's possible that that's the low of the channel, and then we get a huge bull surprise on bar 11. The bears see 1, pullback 2, and they're hoping that we get a reversal down. The bulls, they see a breakout, and they're hoping to keep the gap open. Basically, they want to keep the body gap open. You can see we ended up closing the body gap on bar 12 with the bar 5 open. So they were hoping to keep essentially the body gap open with the pullback, and then we ended up closing it on bar 12. So 11 is a climactic bar. It's an overshoot of this channel. It's possible that it's the start of a bull trend and a move up to this area, which is where the open of the month is. But I think if we're going to get there, we're probably going to have another opportunity to buy. And then you get a large outside down bar closing near its low. The possible parabolic wedge. The problem with selling below 12 is we have not closed below the moving average yet today. And you're following 5 straight five straight bull bars. So we've had 9 bull closes today and only 3 bear closes. Granted, 12 is a big enough surprise for a second leg down, and it's probably okay to sell the close of 12 and take a chance we've seen the high of the day. If you're doing that, you are trading against 5 bull closes, so you might get a lower high first. You can see we actually ended up getting a higher high here, which I thought isn't all that common. But the problem, that you might run into is the bears who sell below 12, they're hoping that we basically collapse down. And if we don't on 13, some of them might buy back shorts. Traders who are selling here are probably taking a chance that we're going to close this gap. Because if it's trading range day, we should close gaps. So then maybe potentially taking a chance we're getting back into this area. 13, a disappointing bar. So if you sold below 12, 13 is rather disappointing. However, I'm not going to buy above 13. There's probably sellers above expecting a second leg down. Obviously, those traders who sold above 13 ended up getting trapped on 14 and were not able to get out until much later in the day, but they were eventually let out of the trade. So 13, disappointing. Some bears, they look to buy back shorts when 14 gets to the moving average. They buy back their shorts at the market with maybe a 1 or a 2 points, maybe a 2-point scalp and then exit. And that's what's causing the huge bar on bar 14, bull bar. I think 14 is a surprise. It's disappointing. I thought that, it's okay to get a pullback after, 5 straight bull bars. However, you don't want a bull bar closing your high like you got on bar 14. So I thought 14 was a relatively disappointing bar. However, the thing you have to keep in mind is the bears who sold below 12, if they sell more above, they're going to have a chance to get out at break even, and they were able to on bar 17. So 14, a bull bar closing near its high. It's a possible swing buy. I think you could take it, but you have to keep in mind that 12 and 13 is strong enough for a second leg sideways down. So the bears who sell below 13, like I just said, and scale in are going to make money. So that's something you should keep in mind if you're looking to buy above 14. Follow through on 15. So the bulls who bought, they were able to make a pretty quick 5 points. And 15 does close above the 12 high. However, it's unable to close on its high. So it's not really worth it. It's a possible parabolic wedge. And we haven't gone or closed below the moving average yet today. However, the bulls are not doing enough. We're in this weird area, I think, because the bears, they keep getting trapped, but the bulls are not really doing anything to prove that this is going to be a bull trend day. So to me, it still looks like probably a leg in a trading range. So 15 consecutive bull bars closing near their highs. or sorry, 16, a bear bar, an inside bar. It's below one short. Bulls or bears could argue higher high major trend reversal. We had a trend line here, and bears got the trend line break, and they want a higher high major trend reversal. Is that all that credible of an argument? I'm not really that sure. It's kind of difficult because it's, well, first off, there's a big tail on the bottom of 16, so no one's going to sell below it, and we haven't been below the moving average yet. So it's probably better not to look to sell, but it's also probably not that great to be buying because of 12 and 13. So it's really just kind of difficult right now. 17 consecutive bear bars, big tails on the bottom of 16 and on 17, possibly two legs on a lower time frame. You know that, the whole move up from the 13 low to the 15 high, bulls are going to buy, but they're going to buy 50% pullback more likely than any new highs, which you can see ended up happening. So 18 bulls, they buy the 50% pullback, and we're starting the second leg up for the bulls on 18. So 14, 15 first leg, pullback 16, 17, and then start the second leg up on 18. Do you buy above 18? No, not really. It's a bad high one buy for the bulls. So I'm not really willing to do anything here. Bears maybe are scaling in. 19, an inside bar. Do you sell below 19? Probably not. Do you buy above 19? Probably not. So again, maybe you buy below 19, but you still have protection over the moving average because we haven't closed below the moving average yet today. So unless we get a close below the moving average in dramatic fashion like we did on 59, there's not really a reason to look to short. I think the only I thought 12 was a credible sell, but it's definitely a swing trade and the risk is reasonably big. However, it's definitely possible. You're looking for the market to double to the downside, essentially. 12 flips the market to always in short, so you're hoping that it remains always in short. And if you sell, you're risking 13, 14 points, trying to make 45, 46 points. So 40% probability is more than enough. So where was I? 2022 bears, they want this to be the start of their higher high major trend reversal, this to be the higher or the lower high they have to get, and then 20 to be the start of the bear trend down or the bear channel. But it's probably not going to happen. The bulls see one, pullback two, and they're expecting buyers in this area, which there probably will be because bulls keep buying the moving average. But they look at every new high, right? We go to a new high, they sell. The limit order bears make money. We go to a new high, they sell, limit order bears make money. New high, they sell, limit order bears make money. So every new high, the bears sold. See here, they sold, they made money. They sold, they made money. So every single time we went to a new high today, the limit order bears were waiting to sell and continued to make money. However, the bears struggled to get a lower low. You got a higher low, a higher low, a higher low. It's a double bottom, so it's an exact the same low. And we finally got a lower low over here, but it was the end of the day. So we continuously got higher highs, but bears continued to sell the higher highs and make money doing so. 21, you can see a bear bar or a bull bar, but a big tail on the bottom and the top, so really not all that great. 22, an inside bar, doji bar. What do you do at this point? Nothing. I think this is a great time to just do absolutely nothing. It's possible. What does either side want, right? Well, the bears want the lower low major or the higher high major trend reversal to succeed. What they really want is a close below the moving average, because most traders know that when we get below the moving average, the bulls will probably try to buy it the first time. So what they really want is a close below the moving average and then either a collapse or we pull back a little bit and then start another leg down. And the bulls don't want to let the market drive the moving average. So they're going to try and get bull bars closing near their highs to drive the market up to the open of the month. 24th, a bear bar closing somewhat near its low. It's maybe a higher high double top with 20 bar 20 or a low. You could argue it's just a low too short, but or a low 3, either really. But I don't think anyone wants to sell below 24. It's a tight trading range. 25, you can see sellers more above 24 than below 24, and then they bought back their shorts around the 24 low during 26. So again, 18 through 26, the bulls are just trying to get a breakout to the upside in a measured move, and the bears are trying to prevent that from happening and get a close below the moving average at some point here. 27, a bull bar, but I don't know. Is this what you want to buy? We got back to the 15 close and there were sellers. So if you're looking for a breakout above and a measured move up, you're hoping that we're going to get a strong bull bar closing near high, and we don't. 27, and then again 28, bull bar, and it does close above the bar 15 high, which is good for the bulls, increases the odds that we're going higher. But look at it. It's really not all that great. You wanted a better looking bar. It has a huge tail on the top, so it's really not worth doing anything. 29, an inside bar. It's a high one for the bulls, but this is not the high one that I really want to buy. It seems like a high one high in a trading range. Every time we've gone to a new high they sold, new high they sold, new high they sold. So maybe we're getting the breakout above and a measured move up. We haven't been in the moving average yet today, but if you're buying up here, you got to be really quick to get out. Because if you don't get a really good looking follow through bar, traders are probably going to start to exit. 30, disappointing, I think, if I was longs. Bulls who were buying above the high 129, they know it's not a great high one, but they also know that the bulls are doing a good job keeping the market above the moving average. So they want to buy and they want the market to race up immediately towards their profit target. And instead they get a disappointing bar on 30. So a lot of bulls will just set an order to get out maybe if we go below 30. What those bulls are doing is they're taking a chance that traders are just going to buy the market because now they can do so with very small risk. And now we're going to get a big rally. And we started to bounce on 31. And we were up in this area for a minute or two. And then the bulls ended up deciding to scalp out. And that caused bar 31 to be a bear doji bar. Do you sell below 31? The context of the wedge makes sense. 1, 2, 3. But I'm pretty resistant to selling unless we get the close below the moving average first. So I'm not really willing to take this short. 32, another bear bar, but a big tail on the top and the tail on the bottom. So we're probably going to the moving average and we're probably going to get the close below the moving average that the bulls have been wanting to get, but I'm not sure how much lower we're going. 33, another bear bar, but a big tail on the top, a big tail on the bottom. You can see we got right to the moving average and traders ended up buying as we fell below the moving average, bulls knowing they're going to be able to make a scalp. You know that the higher lows in trading ranges are support. So you obviously know that the bar 18 low, which is the most recent higher low, is going to be a support level in this area. 34, another bear bar, but we have huge tails, 33, 34, really not all that great. 35, a bear bar, but tail on the top, tail on the bottom. It is, 6 straight bear bars, so you could sell below 35 and just, take a chance that we either get a lower high and start to reverse back down. So if you're selling in this area, it's a trend line break, right? You can see it here. So if you're selling in this area, you're taking a chance we either pull back and then get a lower high, possible major trend reversal somewhere over here, or that the bulls end up giving up sooner and we just collapse down. So you can take it, but you have to understand that you're going to probably sit through a pullback. 36, a bear bar, but a big tail on the bottom and the top. But it is 7 straight bear bars. There's nothing to buy for the bulls. However, we are in the buy zone in general, so we might get a little bit of a bounce. Obviously, 41 was a surprise. 37, a inside bar, probably not really worth doing anything. Again, probably it's a low one short for the bears, an inside bar, low one. Probably buyers not too far below, probably sellers not too far above. And you can see you got buyers below 38. Disappointing. Big tail on the bottom. And then 39, a big tail on the top. So we have consecutive doji bars. We basically have 4 straight doji bars here. So most traders are expecting a pullback at this point, and either we're going to get a little bit of a bounce and a lower high and then a major trend reversal. The bulls are going to give up, or third option, huge bull surprise, which I think is mostly due to bears quickly giving up and scalping out. So now it's a possible wedge, 33, 36, 38. And we have a huge bull surprise on bar 41. Do you buy above 41? Yeah, I think you can, and you can take a chance. The context is a little weird because I thought that if we were going to go up into this area, we probably would have kind of started the journey more over here. But it was still credible to buy for sure above 41, taking a chance that we have a double bottom, 1841, 40% chance that you get a measured move up. And not so surprisingly, guess how far up the measured move is? It leads you basically exactly to within a tick of the open of the month, right? I believe it was within a tick. Open of the month is 56.57, and the measured move brings you to 56.75. So it's not a coincidence that that's where the measured move is. And when you have a double bottom bull flag like we have on 18 and 41, there's a 40% chance that you get the measured move up all the way to the top of the bull flag. So the bulls, they buy, they have a stop below here. They're risking 8.5, 9 points, which is a lot. but they're trying to make 24. So 3-to-1 risk reward on a 40% chance. That's a reasonable trade. 42 consecutive bull bars. You could argue this is a midday reversal for the bulls for a second leg up. Consecutive bull bars, but not huge momentum, so not huge follow through, but still a bull bar, so still follow through for the bulls. 43, 3 straight bull bars. We're probably going at least a little bit higher. 44, another bull bar. This is really a game of, are we going to get a bear bar closing near its low before we get the give up bar from the bears? So the bulls are trying to get another bar that looks like bar 41. And if they get it, it symbolizes the bears giving up and their realization that we're probably going at least a little bit higher, if not a lot higher, up towards the measured move. However, the bulls need to do more. They need to get the bears to give up. And we're getting doji bars, which is fine. It's okay to get doji bars, but you eventually start getting to a point, bar 45, 46, 47, where you need the bears to give up and you need to get a big bull bar closing your high. And you can see 44, a big tail on the top. So disappointing. Had it closed on its high, and then possible that bears give up above there. And then 45, an inside bar, a high 1 for the bulls. So it's for the bulls, it's a high 1 in the bull trend. Bull trend started at 41. And we have continued 42, 43, 44. And 45 is a bull bar. So, but it's not really that great. It's not closing very strong. So bears are probably willing to sell above it. Remember, if you get a high 1 in a bull trend, it usually ends up leading to a pullback before trend resumption. So at this point, on the close of, I would say 46, you can probably have your stop below 42, since this is the spike and this is the start of the channel. And just if your premise is we're getting a breakout above here and a measured move up, then we shouldn't even get back here if that's going to happen. So 46, a bull bar. It's follow through for the high 1. It's 6 straight bull bars, so there's going to be buyers below scaling and lower. However, it does not close above the bar 44 high, which I think is disappointing for the bulls. 47, buyers below 47, big tail on the bottom. 6 straight bull bars, possible pullback to around 50%. And then 48, bull bar, but sellers above the bar 46 high during bar 48. 49, bear bar closing near its low. I thought that 47 was okay. It wasn't great for the bulls. However, 47 was okay since it's a first reversal down. And once you get 48, a bull bar, you can probably just put your stop below 47. However, then you get 49. It's a low too short. It's a second reversal down. It's a possible head and shoulders, 15, 31, and 49. So it's not a good sell, but it's kind of difficult to not exit your longs below 49. So most traders exit their longs and they potentially get trapped out on 50. However, 50 is not able to close on its high, and it doesn't close above the high of 31, I do not believe. So it closed at the high of 31, which is not as bullish as it could be. And there's a tail on the top, which is a little bit suspicious. 51, an inside bar, a high 1 for the bulls. So really not all that great, I think. If you bought, as the market went outside up, let's say you exited below 49 and you panicked because 50 was racing up and you bought as the market was racing up. Now you see 50 as a tail and 51 is a bear bar. So it's a high 1 for the bulls, but it's really not all that good. It's at the top of the trading range. We might have 3 pushes up. If 41 was the spike, 42 through 45 is the first leg pullback, and then 48 the second leg pullback, 50 the third leg. So that's possible. 51, like I said, inside bar high 1. 52, consecutive inside bar, so an II, 51, 52. Probably buyers not too far below, probably sellers not too far above, but I think bulls exit below 52. An II pattern, so 3 consecutive inside bars. It's kind of funny because I mentioned the other day how the market will bring back patterns from a while ago. And I hadn't seen an III in a little while. And then over the past few days, we've had 2 or 3 of them. So 3 straight inside bars on 53. You can exit your longs below. Some traders will sell. It's reasonable to sell considering, small bar, top of the trading range, but it's kind of difficult to take the short, but it's definitely okay to do. We get follow through on 54 for the bears. Good for the bears. 4 straight bear bars. We're probably going at least a little bit lower. Again, on trading range days like this is a very pure trading range day. The trades that work are often the small, crummy signal bars like 31 and 50, 53. And the stuff that looks good doesn't end up working nearly as much. So 54, 4 consecutive bear bars, and then 55 became really, really large. And it basically just was a vacuum test of the 41 low. There's going to be buyers around the 41 low since it's a clear support point. There's a huge bull bar, and we had a bull channel starting right here. So you know there's going to be bulls willing to buy right here, step in. So the bears who sold for any reason have a pretty good profit, and they're buying back their shorts, and that's what's causing 55. However, it's still a really big reversal down. So we might get a second leg. D6, a bull bar. You can see it went all the way back up to around the top of the III. So, the 51 through 53 is a triangle on a lower time frame. And the market on 56 retested the apex of that triangle. 57, an inside bar, a low one short for the bears, but I don't really want to sell below the bar with a big tail. 58, another tail, so a bit disappointing. And then a bear surprise, 59. You can sell below 59, taking a chance that we're going to get a breakout to the downside. The problem is obviously the bulls have been pretty aggressive about buying in this area. The 18 low, the 40 low, 55 low. But you can sell, taking a chance that maybe we get back to the open of the day since it's a trading range day. However, 60 is not the follow through you wanted if you sell below 59. It's a good looking bar on 59, but you need more follow through than 60. You can stay short, but again, you're looking for a give up bar. The same way the bulls were looking for a give up bar after bar 41, the bears are now looking for a give up bar after bar 59. 61, again, disappointing follow through, but there's going to be sellers above after 5 straight bear bars. So you can see traders initially sell above during 62, rally on 63, but it's going to be a minor reversal up. 62 is not a good signal bar. Not a lot of good signal bars today. So it ended up getting a lot of minor reversals when you don't get a lot of good signal bars. 64, a bear bar closing near its low, but it's a micro double top, 63, 64. And you can sell below 64, taking a chance that we're still going to collapse down, but it was probably spiked down to 61, pull back 62, 63. And so if 64 is closing on its low, it might be more of the bear channel. Do you sell below 64? Like I said, you can for a swing. 65, kind of disappointing follow through, but still okay to be short. But you need a collapse pretty quickly, and I think 66 is disappointing. So I think that a lot of the traders who sell for any reason, 60 or 59, 64, whatever, are going to be exiting above 66, which is why a lot of other bears sell at the close of 66, trying to make 67 a big bear bar closing somewhere down here and a possible breakout below what should have been a trading range, and maybe they'll get a measured move down into this area. However, it gets bought up and it is unable to close below the low of bar 65. So that's disappointing for the bears. Might be 1, pullback 2, pullback 3 pushes down. 68, a bull bar, but you can see we're unable to get back above the 66 high, which is where I think most bears were ready to exit. They would have exited here, but it didn't allow them to. Were bears able to make 5 points? So 21 tick trap. The bears who sold below 59 were not able to make 5 points. And you got sellers above 67 during 68, buyers below 68 during 69, 69 a bull bar, but a big tail on the top and the bottom. So not really worth buying above, but bears can exit. 70 follow through, but I think at this point we're probably just going to continue sideways. And then we went sideways for the remainder of the day. You can see we basically tested back the bar 58 low, the bulls who bought below 58, basically betting that it wasn't going to turn into a big fair trend. They were brave enough to scale in, they were able to make money. So for stop orders today, probably could buy above 3. I think 12 was fine personally. 14 makes sense, but kind of not great after 12. You could sell you maybe sell below 31. I would not. I'm not doing that. Maybe you could sell below 35. Definitely buy above 41, 42, 43. Tough to do anything else. You could sell below the 3 inside bars, so you could sell below 53. 59 made sense for sure, but that's pretty much it. There's none of those really worked all that well, besides the really small ones. So that's kind of part of trading though. On the daily chart, we have a bull bar, but it's kind of lacking momentum. So we have 5 straight bull bars, but again, this isn't as good of a buy the close bar as a lot of bulls want. Probably more of a trading range bar. We're probably forming a trading range between this area and this area. The weekly chart, we have a big bull bar. It's an inside bar and a possible high one for the bulls. Bears think this is a second leg trap. 1, pullback 2, and the bulls are hoping we're going to get good follow through and a breakout far above the high. And it might be a second leg up. They want the second leg up to at least go to the all-time high. I would not be surprised if we got to the all-time high. This is a pretty good looking bull bar, and it might bounce up. The logic being, it's 70 or 80 points above, and the stop goes 300 points below or 240 points below. So it's really not very good to buy there for a scalp to the all-time high. However, it tells me that it's high probability because the risk reward is pretty terrible. So I do think we are going to go back to the all-time high. But again, it still feels like this whole thing is going to become a trading range. All right, that is